Hey traders, welcome to another Performante podcast. This is episode 7 that we're going to be doing today, and in this video we're going to be going over the oil crash that recently happened, and hopefully everyone is having a good day, and I'll let Nathan take it away here.
Hey everyone, I hope you're staying safe and sound. Welcome to the most recent episode. But first, just wanted to reiterate that we are not financial advisors. We do not have formal education, are experiential in nature. We're traders with a passion for teaching, but at the end of the day, the decision you make should be your own.
Yeah, especially in this market conditions, there's a lot of people, saying bearish, bullish, especially obviously with oil going negative. That was something that never has happened, and we did have quite a bit of a discussion within our Discord saying, is this free tendies? Is this a risk-free trade? And when you're going through something that's never been done before, especially if you're trading with complicated instruments like futures or contracts or differences or CFDs, you definitely need to be careful. You need to really make sure you know what you're getting yourself into, because at the end of the video we'll kind of discuss what one trader went through and how he kind of put himself in a difficult position, let's just say.
Yeah, needless to say. But if you are looking for a broker to get in on some of this volatility, you should consider Webull. So if you do want to get some free stocks, just navigate to our website, performante.ca, and visit this menu, free stocks. And just for signing up, you get a stock between $2.50 and $250, and if you make an initial deposit of $100 or more, you get another free stock between $12 and $1,400. Completely free, deposit into your account, sell it to cash, long-term hold, whatever you choose, the choice is yours. And so, let's dive into what we want to talk about. First, we wanted to just go over the Johns Hopkins COVID map. As we can see, there's 2.4 million confirmed cases. It's really starting to escalate quickly, with US being the top contributor, with 755,000 people infected. And globally, we're looking at 164,938 total deaths. Oh, where did that go? Just pull that back up there. Yeah, things are escalating very quickly. I don't know.
Yeah.
There's only so much that you can do in a situation like this.
It's already updated. That's insane.
2.5 mil, just like that. We're doing it live, baby. There's pretty much. Oh, do you remember the game Infected Inc? Is that what it was called?
Yeah, I remember that. It's kind of like that game where you have the red icons, but in this circumstance, you're trying.
Penetrated. It's all over. That's how you know.
It's when Greenland goes. Yeah, it's crazy to see the United States.
That was the other one that was very hard to get. 121. Okay.
Wow.
COVID's more infectious than anything I could design in Plague Inc.
Yeah, I guess that would have been a hard one. Yeah, it's an isolated island in itself, but yeah, it's crazy to see that U.S. is how quickly it's surpassed every single country, really. And what's a little bit scary, and we're not going to dive into it in this podcast, but there's protests going on, and people are conjuring in large groups of people who are rioting and saying that this is a hoax, and it doesn't really matter if people die because they need to go back to work. And I think we have to consider the people who are in positions where they could get affected and could actually die. It's a collective cause that we are trying to fight. I just wanted to try to shine some light on that topic a little bit.
Yeah, the sum is greater. The whole is greater than the sum of its parts. We have to work together, and encouraging civil unrest and protests and reopening the economy too early is going to have a greater negative impact than a positive.
Yeah. Holy.
Watch that Netflix. Do what you got to do to keep yourself entertained. Stay safe out there.
Yeah. Also, just saying, the TradingView chart is absolutely plummeting. It was from $9 when we had this podcast to now $8. Holy shit, man.
So before we get into oil, we wanted to bridge coronavirus and COVID. So first we wanted to talk about the oil prices yesterday. What the fuck happened with that giant shit zone? So, globally, COVID has massively decreased the demand for oil, right? Nobody's driving. Production has decreased with oil related products. There is a massive decrease in the consumption of oil and oil based products.
Yeah, and like we talked about previously before the podcast, in these refineries, like we said, I'm not an oil expert or anything, but you can't instantly turn the tap off when it comes to the production of oil. So let's say if a company did want to stop the supply from coming in, they couldn't do it instantly. So even if they said, okay, we want to stop the facility, there's still going to be an addition of supply coming into the marketplace. And if there is a decreasing demand with increasing supply, and if you hold any asset within that particular situation, you're in for a very, very difficult situation. And that's what we're seeing right here is you're seeing a glut of supply where, like we said in Alberta, it's hard to get it out and no one's buying. So increase supply, decrease in demand. This is exactly what you get: an absolute capitulation in the price of oil. Now, the when it went negative, these were just the futures contracts. They weren't the actual. Well, some oil is actually negative, but the futures contracts went negative. So then the producers were actually paying people to take oil away. Now, yeah, if you are not really aware of, I guess, the markets and don't really understand it, how can that even be a possibility? But it's because these conglomerates, these massive corporations, have so much oil, they literally can't store it anywhere. Like, they just don't have the space. So the only way they can get rid of it is by paying people to get rid of the oil that they currently have. So this is how much supply that is currently in the market. These huge corporations are willing to pay people to get rid of the oil that they have. Yeah, it's unbelievable.
Another way to think about this would be if you were signed up for like a food subscription service, like Good Food, for example, and they were set to deliver a meal to you on April 21st. Now you agreed to this happening and you'd already paid for it, but lo and behold, you hadn't been eating that much and your refrigerator was completely full. But your food came on April 21st, you have nowhere to store it, so you've got to pay your next door neighbor to take it off your hands. That's kind of the situation we've found ourselves in, that there is just not enough consumption of oil, there is an excess of supply, and we've pushed ourselves into a very unfavorable supply-demand curve region, right? Shrinking demand, rising supply equals a crash in price.
Yeah, and to be honest, it doesn't really seem like it is gonna get better anytime soon. We can even see today, soon after we saw that absolute capitulation, it did actually open back at $20, and then it's going right back down because the fundamentals have not changed at all. We're still seeing increasing supply, we're still seeing decreasing demand, and until COVID-19 does kind of pass through to a point where the economy can get up and running, where airplanes are flying, where ships are moving, cruise lines are going, and people are driving to work, cars are, on the roads, we're not really going to see any upside movement, really, in my opinion, for oil because the demand just is not there. So it does kind of seem like if you are looking at a short bias at this point in time, you're just kind of getting the crumbs, but always be safe. But I think that the short bias is still going to continue for the next little while here until we see some sort of end in sight, the light at the end of tunnel for this whole lockdown situation.
Yeah, like we always talk about when we're trading, we need to see that shift in supply demand, and I don't think we're going to see that anytime soon. I personally think it's a probability that this could become cyclic. I mean, the futures crash that happened was for May delivery, but the futures price that's on screen right now for $8 a barrel, that's for delivery in June, because the May contracts have already executed. So June contracts are already crashing. When the time comes around for delivery, I'd imagine we're going to be in the exact same place that we are now, right? There's no demand, rising supply. Why would refineries try and store oil that they logistically can't? The price goes negative, they need to get rid of their contracts. And now I think we're just going to start seeing these cycles until we see that shift in supply demand.
So just month after month, capitulation back down, which theoretically wouldn't be a bad trade, but yeah, we'll see how it goes. I think that thesis is actually pretty bang on in terms of what could actually potentially go out. So yeah, we'll see how it goes. That's you really put the nail on the head on that one.
And so we'll just move on to the next topic, still oil related, but this is more about Jason Kenney. He is the Premier of Alberta, and Alberta is the largest oil and gas producing province in Canada, right next door to us in British Columbia. And they're widely considered as like the Texas of Canada. They love their guns, they love their oil, bleed blue, conservative.
Yeah.
So, I'll just read the tweet out for anybody that's just listening in. And this is from the leader of Alberta. Oil and gas is the largest subsector of Canada's economy. It is by far our largest export industry. In the past 18 years, the industry has contributed $359 billion in taxes and royalties to public services. Over 500,000 jobs depend on oil and gas. When Canada's central auto sector risked collapse in 2008, Canada took action to ensure a future for those workers. A collapse of the Canadian energy sector would be economically devastating for the whole country, from banks to pension funds to manufacturers to government revenues. Alberta is doing its part to ensure a future for the industry, in part through a $7.5 billion investment in the construction of a Keystone extra-large pipeline. We appreciate last week's federal announcement to create oil field service jobs through reclamation to help create company jobs. But by investing in technology and equipment that reduces methane emissions, and with important credit facility to support liquidity for small and mid-sized energy companies, but significantly more action is urgently needed to ensure a future for an enormous part of Canada's economy. For those who don't know, I explained it briefly before, but Alberta basically runs on oil. There are two big cities in Alberta, Edmonton and Calgary, and this is where you will find Canada's corporate offices for Shell, for Husky, for Esso, and those massive oil and gas conglomerates. That's where they live, because that's where all the engineers are, that's where all the manual laborers are, and that's where all the massive oil and gas operations are.
Yeah, to see this many people's, I think they will definitely get a bailout. That's not a question. It's just a matter of how many, because like we said before, until the supply and demand shifts, we won't really see it pick back up, because if there's no demand, the price won't go up. It's as simple as that, right? So until until we see that, yeah, until we see that fundamental shift, how many injections of liquidity, aka how much cash does the central banks need to print and give to these oil companies in order for them to basically get back on track? But this has to be in confluence with the economy starting back up. So it's a very difficult situation for these central banks, because they need a bailout right now, and if they provide them cash, there's still no demand, there's still no production. So it's a very difficult situation for them to really be in.
It seems like everyone's turning to the government for money. In Canada, we have the CERB, which is like a relief bursary, $1,200, $2,000 a month. If you directly lost your job because of COVID, government is bailing out businesses left and right. Our airlines need help. Oil and gas need help. We have to supply PPE to the provincial hospitals. Like, there's so much different demand and strain on the government at this point in time that we've never really seen pretty much every single sector put their hand out for that government cash.
Yeah, almost every single one, because it will be banks soon enough, because obviously with mortgages, that's a huge problem, but also with investment funds and pensions funds, like Jason said, there are a lot of pension funds and major funds around Canada and the United States that are invested in these oil companies. And if they go bankrupt, these pension funds will go bankrupt, which means a lot of these pensioners will now have no money to pay themselves with. And obviously that's a major issue with pensions in municipalities and provincial, and it's a big deal. And a lot of people don't really understand or think about the pension funds, but they currently, like I don't have stats to show you, but they currently are running major deficits in terms of the pool of money they have versus what they're paying out to people who are living off of these funds. And, with these oil prices, with the companies that are in the oil sector dropping substantially, yeah, it's not just the oil sector that's going to get an effect. It's in my opinion, the entire economy here. And obviously with the COVID situation, it is devastating for a lot of individuals. So yeah, I don't really have much more to say on that. I'm going to try to keep it a little bit lighthearted, but obviously this is really detrimental to not just Alberta, but in southern states in America, in Texas, obviously WTI, Wexus, Texas, Intermediate, they were a negative as well. So yeah, the entire West is seeing some major blows here, left, right, and center.
For some reason, the trading view window isn't showing just how negative it went. Like if I pull up WTI crude oil,
It just goes to zero or a penny.
yeah, it goes to 0.01. I guess TradingView doesn't. They don't have the coding to support a negative value for oil.
First time ever.
It's like when Robinhood didn't account for leap year.
Yeah, exactly. Come on, guys. We don't have to put it in.
This isn't meant to happen.
Exactly. It's like that.
Another impact of the low oil prices, sorry to cut you off there, was just like the strength of the dollar. Like if you look at Canada's net export, like Jason said, oil is our biggest export. I would say second to that is probably lumber, food, etc., etc. And so the strength of the dollar goes down, and so does the U.S. Like if they're propping the dollar up with money printing, repo operations, etc., but the value of the dollar is going down because you have no national export, you're pumping air into a bike tire with a hole in it.
Yep, totally. That's a really good analogy.
Like you're pumping liquidity, capital, whatever you want to call it, into a broken economy because it's going in one side and it's strictly coming out the other.
Yeah, it's times like every single sector. So this is, I think, where inflation will come in. It's pretty inevitable at this point because, like in 2008, we didn't see inflation. For me, because of, I guess there's multiple reasons. Technology being one of them, just being making business more efficient, and things become deflationary because technology reduces the cost for goods and services, but also A, because of the velocity of money, and B, because we bailed out corporations and banks in 2008. So then that money went into financial sectors like traditional assets like stocks and real estate. But then now, not only are you bailing out corporations like 2008, but you're also giving everyday citizens, Canadians, Americans, people all over the world, central banks are giving payments directly to individuals. So you're giving it to Wall Street and Main Street. And then these increased amounts of dollars are still fighting for the same amount of goods and services that everyday Americans and Canadians are going to be purchasing. So I think this time around we will start to see inflation over time, not in a week or in a month or anything. This is still a very deflationary period, but I do think that this is the time where we will start to see the scare of inflation because you're seeing such an overreaction from the government bailing out literally everyone that is asking for it. I've even saw a company who gave back money because they're like, we didn't really need this, but we're going to give it back, so hopefully you allocate that capital to someone who needs it more. So they're literally giving money out left, right, and center. So it's just a matter of time, in my personal belief. And they're going to continue doing it. Like, for example, let's talk about oil, right? This whole catastrophe will probably get bailed out by the governments, but it's a prolonged, like you said, cyclical pattern that will probably be continuing until COVID has kind of flushed through whatever economy that it's going through. So how many bailouts is it going to take, right? That is really the question that I think a lot of people have on their minds. Is it's not going to be one, it's probably not going to be two, it's going to be multiple, and they're probably going to be doubling down each time.
That's the $1 trillion question, right?
Yeah, exactly. So, Yeah, it's definitely devastating.
COVID was really the straw that metaphorically broke the camel's back.
Definitely, I definitely think so. Like a lot of people are saying, oh, it's completely COVID, but like we were bearish even before this, and obviously COVID was a huge shock to people, and like I didn't really see how devastating it could have been when it did start that huge move to the downside, but the fundamentals, like they were already doing repo operations before 2020, right? And European economies were already in negative interest rates, so it was already looking bad. And then once this came through, it was just complete devastation. So
Yeah, I mean, we've been talking about negative yielding bond curves. We've been talking about negative interest rates in Scandinavia, Japan. We've
yes,
been fundamentally bearish for a while, but it's been this COVID that was really the spark to expose all the fundamental weaknesses in the global economy.
yeah, it definitely exposed a shit ton of people, but yeah, oddly, there's a few people who I'll talk about it within the video on YouTube. There's a few people on the higher ups who miraculously sold in January and who bought a bunch of PPE and Zoom and these telecommunication services. There's some shit going on. I don't know. I can't say that this is made up in any way, shape, or form, but I do think that people knew about it beforehand and we're not telling American and Canadian citizens and the Westerns just because they wanted to get ahead of the curve first.
I think there's definitely been an unequal distribution of information availability. Like if
Definitely.
you look at the amount of CEOs that have quit in 2020,
Yep.
it's the highest amount ever.
Yep. Exactly.
Which is a very weird statistic within the context of modern economies falling apart. Corporations suffering some of the biggest losses ever on record.
Yep. I don't think it's a random coincidence at all, to be completely honest. But yeah, it's crazy shit going on. We've been talking about big disruptions coming into the space, and this is the biggest disruption that we've had in decades and decades. In 2008, it was mainly the banks, right? They had major issues with the mortgage-backed securities, and those instruments had inherent risks with the inputs that were actually getting put into the mortgages. They're subprime. They weren't great mortgages with people who were unqualified to actually be paying mortgages or to be even getting loans. But with this is like it didn't start systemically, but it is showing all the systemic faults that are within the system, basically. Like even with just paying everyday citizens $1,200 in the United States, like they're having a major trouble actually getting checks to people. Like they're like physically sending checks to people now, which is like archaic compared to what we have available, right? So I think
They're sending checks to people that are dead.
really I didn't know that. Wow.
They just don't really know who's alive and who's dead, so a lot of dead people have been receiving deposits in their account just because the US government is like, fuck, okay, I think this is a list of people that need money, send, go,
Wow.
distribute.
That's brutal. That's just like
It seems like this has exposed a number of problems in our economy. It has exposed that corporation aggressive buyback programs were very greedy, and that now companies have no free capital, so now they want to turn the government for free money. It shows that citizens are in a similar place in that they don't have any savings, they don't have equity, they rent, they don't buy, they have lavish payments on stuff they can't afford, and now they turn to the government for money. Massive decrease in productivity, massive decrease in jobs. I mean, all the jobs since the Great Depression in the 30s are gone.
yeah, that
We have lost 90 years of progress.
yeah, that's a stat that I can't even wrap around in my head. That's so long of slow, steady productivity growth, and in a 2 month period, really, or a month and a half, instantly.
The S&P bounced back 50% from its lows, so the economy's fixed, right?
Yeah, exactly. That's the scary part out of everything, really. And I think a lot of people are aware that it's probably not going to bounce back. Like we're obviously bearish. Like I currently have a short on the SPX, but Yeah, just be careful for anyone who is looking to long oil companies, who's looking to long because a certain stock is just too low. Those are some pretty devastating last words. This has to go up because it's too low, and look at the price action, not the price. It is a good way to put it, and we do see that it did break this key level of an ascending trend line connecting the higher lows. So yeah, I'm pretty bearish on the entire market. Yeah, definitely. So I'm pretty bearish on the market. I think that the oil news will definitely play a role in the next leg down because there has to be fundamental news that's going to drive the market down further. And we can see that the job numbers, the stats aren't really doing that. And within that huge move up a few days ago, there was some news that Trump was going to create guidelines for when they can open, which they did. It was just guidelines. There's no actual concrete formation of when they're going to open. It's just hype. And then on that same day, 20 million people got filed that they're now unemployed, but the stock market still went up. So, it's just there's zero connection with fundamental news that's coming out and the stock price in my personal views. So, if you're a technical trader, definitely stick to looking at the charts. Yes, obviously fundamentals play a huge factor in it, like understanding what happened to oil and the fact that they're probably not going to get out of this hole for the little while here is going to be very bearish. So that is going to be a fundamental to play. But, if Trump just says some, hype news that has no real tangible statement or outcome.
Just pops on Twitter and starts talking shit. Futures are either gonna love it or hate it. Like that's just the way it is. The way that the market reacts recently seems like a coin flip.
Yeah, exactly. So just trying to stay safe, widen your stop loss, use larger time frames, and stick with the charts and try to just catch the big major moves. And in my opinion, I think it's best to stay away from short-term trading because with so much noise and uncertainty, it just makes sense to try to catch that next big move that I think could be coming here for the SPX.
And never be afraid to position down.
Yeah, that's definitely a good option.
Very tempting to go all in, heavy position size. You're confident that this is the trade that's gonna get you the new Tesla Model X.
Yeah, exactly.
Get caught up in that mindset, but you gotta protect that capital. You only have 100% to lose, and if you lose 70% in one trade, it's all over.
Yep, it's a really good analogy. Like if you lose 50% of your portfolio, it takes 100% to get back to your original spot. And that percentage where you go down versus back up, I think a lot of people don't realize when you're leveraging 25 times on some exchange. Not saying it's a terrible idea, but if you're losing more than 5% of your account on any single trade, it's going to take you more to climb back up. But if you're risking 2% on a trade, it takes you 2% to get back to break even, or 2.01, or not much more of a discrepancy. So I know it's really difficult if you have a small account. I understand that. If you're only trading $1,000 and if you're risking 2%, you're not really being able to make much money. But start small, work your way up. The number one thing is capital preservation, especially now more than ever, because if you are a person who has capital, who is able to deploy it in situations that have a very skewed risk-reward situation, you're setting yourself up to exponentially leap from, where you are now to where you possibly could be to where you, you said, could buy a Tesla Model X, but you need to get there slowly. It's not going to be one trade it's not going to be one trade that's going to get you there. I know everyone sees The Big Short and they say, holy shit, I just put my entire net worth in this SPY short and I'm going to be a multimillionaire. And if that trade goes wrong, you're wrecked. It could double top, wick you out, and then go down, and then you're absolutely wrecked. So, yes, stay safe. There's not much more that we can really emphasize because of the volatility. Yes, stay safe. Managing risk is number one. Yes, I do think that we should be putting on trades. I'm still putting on trades in this market. I'm being low risk until we start seeing some momentum to the downside, but I'm still putting on trades. I'm just not taking nearly as many trades. I've taken maybe a third of the trades I normally would have taken in a single month because I'm just spectating. I'm just watching. And I didn't take any part of oil. Like, I didn't want anything to do with it because I just don't understand it enough for me to say, okay, this is a viable trade plan for me. Like, I don't have the confidence, conviction to do that. So I'm just going to spectate and then learn as much as I possibly can through what is occurring because this is historic. This is history being made right in front of our eyes.
I just got an idea, Keith. If you want to execute on it, we can get a storage locker close to where we live, and when oil futures crash next month, we can store it low.
Yeah, man.
Promotion.
Yeah.
That's
Exactly. Literally can't go tits up. Yeah, exactly. But
So I think we've talked about all of the stuff that we wanted to incorporate in terms of tangible content, but then we wanted to end the episode a little bit lighthearted and discuss some of the top posts from our favorite subreddit, Wall Street Bets. Although we don't contribute because their appetite for risk greatly exceeds ours, it's fun to watch other people's market moves. You know what I mean?
gotta love it. Yep. Lots of emotion up and down in that Reddit sub channel for sure.
And so first we got user Lol Cakes with 10K upvotes on this post, $5 of WTI in his
That's hilarious.
That's just good content, you know? $1 a barrel. No, sorry, not $1 a barrel, 1 cent a barrel. That's the other thing that I think a lot of people didn't understand with these oil future contracts is that you're agreeing to physically buy a physical product. Like, it has to be delivered to you. There has to be completion of that contract. And so I think a lot of people put themselves in funny situations where they saw oil going in the shitter and they're like, yo, fuck, I gotta get in on this. And so I won't reveal the name, but an individual that I know purchased some CFDs and let them execute and is now trying to wiggle its way out of receiving the oil because he lives in an apartment and cannot receive it.
Oh my god. What do you do?
Fuck, I guess I'll just put this fucking 75 barrels of oil into the closet and just hope nobody notices.
Literally. Buy a container? Like, my god. That's the thing with not knowing what instrument you're using. That's crazy shit, but that is too funny, honestly.
Yeah, just a side note, like when we talk about TBIX on TikTok, the amount of people that just don't really understand that A, it's not a stock, or B, what it does, is ridiculous. There's a massive amount of uneducation out there, and it's crucial that you understand what you're buying and why you are buying it.
Yeah, the why is definitely a key importance. But it's or I can't really say buyer beware, but yeah, homework is vital, especially if you're putting a decent amount of. Oh, I fucking love this one. Me and the boys waiting for the V-shaped recovery. This is so good.
It's coming, just hold out.
Ran out of lube, no worries. Oh, it's so good.
Yeah, this is from I Love My Cake on Wall Street Bets. Just want to give credit to these content creators
Oh, that's a good one.
who relates what I do after a good trade.
Give it out. Yeah, it's in volatile markets, man. It's easy to do, to say the least. But that's some good content humor for sure. This is a funny one too. I actually love this one.
63 for a normal barrel, or are we talking 5K for a Supreme?
like the brick man, I swear. They could pull it off if they wanted to.
I can see how much the Supreme brick is actually.
$214? Oh, is this on StockX?
Yeah, 214 Canadian on this one.
Wow.
For a brick. How much do you think a brick even normally is?
Oh god, I probably like in the tens of dollars, but I don't know. 1,000 bricks can be $340. Wow.
So 34 cents a brick.
Wow. That's brutal. That's branding for you right there.
I'm just gonna do some math to see what the inflation is from $214 for 34 cents. Yeah, so it's 669 times more expensive than a normal brick.
Jesus. That premium, though. That's
It's
super.
all about branding, you know? That's Supreme Oil.
It's better, right?
On to the next one.
Yeah, this is golden.
The dollar menu.
This is actually a fact, though, which is unbelievable. But
Yeah, like at least here in Canada, water is more expensive than gasoline. Like if you go to a gas station and you buy a bottle of Dasani water, it's something like 175. But if you want a liter of gasoline, it is 79 cents.
yeah, something extremely cheap. It was like $1.60 earlier last year.
Yeah, I remember like within the last 365 days, I have paid more than $1.50 for a liter of oil.
Definitely.
A liter of gas. Sorry.
Yeah. And now it's in the 90s and 80s, which is unbelievable.
Crazy times.
But there's not really many people who benefit from this other than the everyday person who's paying for gasoline, though. Like, in a sense of how it'll actually impact you, there's not a lot of positives coming out that, like, anyone's going to benefit. Unless you're in the financial markets trading, this is pretty detrimental and going to impact the economy in a negative way. So, if you're hurrahing that you're going to get cheaper gas, it's not sunshine and rainbows altogether.
And lastly, we just wanted to finish up with a massive loss. This person put $690,000 into S&P puts, and they lost 100% of it. So this is almost a $700,000 loss. And they basically, their contracts expired. They entered near the bottom of the recent leg down on the S&P, and then it rebounded and exercised. So they lost all their money.
Yeah, that's super savage. But I think this kind of illustrates being able to cut your losses. Like we don't know this man or woman's portfolio. We don't know if he has 7 million in it, and then this is like a 10% loss for him. But at the end of the day, cut your losses if you can, especially with options. If you don't know what options are, calls are when you think that the price is going to increase and you're going to make money. Puts is when you think that the price is going to decrease, and the price meaning the underlying asset. So this man was betting that the price was going to go down even further, and he literally shorted at the very bottom, which is super unfortunate for him. But I think this really illustrates how important risk management is.
Yeah, I don't really think that. I mean, options are a whole different game unto themselves because it's very skewed risk reward. You're either going to make a lot of money or you're going to lose a very significant portion of your initial capital. But $700,000 is a pretty excessive loss. At least you can claim it next year for taxes, I guess.
Yeah, I guess so.
One way to look at it.
Looking at the positives.
Get a good tax credit out of that.
700, yeah, you could definitely get a lot off your tax credit for sure. But still, that's a brutal loss, man. If you ever have anything like that, take a week off. You're not going to be trading with a clear head if you had a massive loss.
Yeah, this man specifically burnt his tendies. They're not eatable anymore. You can't enjoy them.
No, they're way burnt the barbecue all the way into the core. Yeah, not the best, but yeah, that's I think a good explanation of positives and negatives, I guess, because obviously Wall Street Bets does have a lot of people posting huge gains, and you see that and say, holy shit, I want those massive price appreciation gains. I want to see that massive 10, 20x, but there is a negative side with that as well. With huge reward comes massive risk, and if you got an appetite for it, you should definitely be looking at Wall Street Bets because they do some crazy shit over there.
It's always humbling to see people lose more money than you. Gives you some perspective.
Yeah, definitely. It's a weird thing though. I completely agree, and it's not like I go ahead and do it every single time I have a big loss, but it definitely puts perspective as to how much you lost, and well, it's relative to how much money you have, but very correct. It does give perspective, which is a good thing.
Alrighty, shall we wrap it up?
Yeah, I think that was a phenomenal episode. So I want to say thank you very much for watching our Performante podcast. It was episode 7. We really hope you enjoyed it. If you do have any questions, please drop them in the YouTube comments section below. It would be greatly appreciated if you do subscribe for more educational, informational, and entertaining information on financial news, on many different asset classes, traditional like S&Ps, silver, gold, commodities, precious metals, all that, and primarily focusing on cryptocurrencies because we do think that is the future. So I'll give it off to Nathan to finish off this podcast here.
Yeah, so thanks for tuning in. Like if you enjoyed it, share with a friend if you loved it. We're here to provide as much value as we can, and if you can distribute our content, it means a lot to us. So, hope you stay safe, stay inside, and stay profitable most of all. Take care, guys.